Hey, it's Mike with PriceActionTradingSystem.com, and it's Thursday. It's June 10th. This will be our chart lesson for today. This is going to wrap it up for the week. No chart lessons on Fridays. Most of you know that now. If you're new, I only do them Monday through Thursday because I like to take off a little early on Fridays and get a break. So, um, anyway, I thought I would start with the daily chart today and just kind of give you a look at what we're seeing here. Notice the sideways channel where we broke out and we've come back and we tested that breakout area once. We went higher, came back and tested it twice, and now we're going higher. That's a good sign that we could go higher, and we're right at the midline here. Well, we're a little above the midline because the midline is this dark purple one inside the two gold, and so we're a little bit above that, but we're at a point now where we have some room to the upside. And if we get a measured move just on the range, we're looking to 4,300. So of course that's the moves we get these days from 40. The high here was 42.49, and the actual close was 42.38. So basically, there's not a lot of room from 42.38 to 4,300, but that's what we're looking at, in my opinion. That we're probably headed to test that 4,300. I'm not saying we're going straight from here. This thing could, there is a little bit of sideways action right here, so we could push up and pull back and test that little area on this breakout before we go higher, because the price action works the same on every level. And if you just, let's just say we back way out here, you can see we've got a small channel right there. And so we broke out of it. We could pull back and test that before we go higher. So we'll just have to see. Um, but the price action works the same on every level. The problem is when you get to this daily level, things that happen in 5 or 10 or 15 minutes on your intraday chart, your 2000 tick chart that we use, probably take a couple of days on this chart. So um, you have to, the thing with trading the way we do, you have to have, your timing has to be impeccable. And that's why we prefer to trade the 2000 tick chart, so that we can get our timing much more down to a much more manageable level versus a daily chart. You'd have to have some big margins and some big, um, your timing would have to be even better, because if you're wrong, when you get stopped out, you're going to take a big hit. Of course, your winners are going to be much bigger too. So just keep that in mind. But I thought I'd start with this. Every time I put this up, I get a lot of questions on these, um, the the indicator that's on here. This is our envelope indicator. Um, it's one of our products that we have on our website. If you're interested, go look at our manuals. It's called the envelope strategy, and it's there if you're interested in it. So and you can see basically what it tells you is when to look for reversals. When you start to get up to this purple and above towards this brown, it's probably going to turn down, even if it's only going to be a correction. And you can see just about every time we've been up there for a while, we get a correction back to the other side here, here. Here we just came back to the midline, and here we came back to the purple again, and now we're probably headed back up to the purple, to maybe even at some point we may push through that all the way to that brown band. So just keep an eye on it. Here was an interesting point down here where we pushed up through the brown, and you can see we did sell off rather quickly, but the trend continued up. So, but even though that doesn't look like much of a sell-off, that bar high is 36.50 and the low is 34.98. So that's a huge bar. It was a crazy day, obviously. So anyway, just thought I'd show that to you to kind of get an idea that we could be going higher here. And one thing I want to stress too is whenever you look at this daily chart, or I put it up here and say what I think is going to happen, don't go trading with a bias that, hey, we're going higher from here, which I think we probably will, and there's a good chance. But it could, like I said, it could pull back and test that. It could end up being a failure and turn back down. But generally, when you get that double test, like I just showed you right there, plus notice something else too. There's a new swing low there. It's lower than this swing low, or this one even. I don't know if you really could call that a swing low, but you can this one. and this one's lower than it. So you got a new low there, and you got a first entry short and a second entry short. So that was a failure that broke higher there. And a lot of times that's probably why we ran pretty strongly this morning on that back to that new high point. So, and of course, where did we turn down? Right at the green line. And these are actually not moving averages. Well, they're moving averages, but they're not based off price. They're based off Fibonacci. So this is a proprietary system that we've worked up here using these fib lines. So anyway, let's go to the other chart. So here we are. Here's our intraday chart, which is our 2000 tick chart. And you can see we had a spike and channel up with the break, a couple legs to a new high. And then we shot down real quickly here. It looked like we were going to set up a spike and channel here, but it didn't do it. We had this move down, and then we had a two-legged correction, which is often the center of the pattern, and then the bottom fell out of this thing. And really, I think what prices are doing here is, notice when we broke higher here, we never really tested this breakout level. And so prices were trying to come back and test that. And sometimes when you sell off that strongly, prices will get overdone. And so we really got overdone here. We really came all the way back. Notice we never, technically we did pull back here and test those highs, but we never really tested this breakout really well right here from where we took off to the upside. And this did come all the way back down there. Maybe that's what they were attempting to do. But anyway, we had this big sell off, but again, you get a break and a move to a new low. And then we spiked up again and went into another two-tier channel. And there's tighter channels within that. There's some sideways action here. That's generally a good sign. We're probably going to go somewhat higher when your corrections don't really trend down. They just kind of go sideways. There's a little bit of downtrend there. It's a little two-legged correction, and then we take off again. So, and what I would do on this two-legged correction here is I would at least measure that like so, and you can see that's pretty much where we started finding resistance. We went a little higher and then sold off and got our break, made a new high, and then we were in this for the rest of the day. So that's pretty much how I saw it anyway. Obviously, if you could get a larger channel, he'll put it on your chart. But if you notice, you don't really get, if you draw that like so, it's probably valid. You can see it working off the midline here on both sides. But it doesn't really help you. I don't think you really want to go short right here off that move on just a first entry. So it doesn't really help you. You might have taken this short right here if you drew it this way, but this was never really confirmed. This would have been your confirmation, and it didn't hold. So I just felt like really to trade it, you needed to be trading these and go with that. So that's how I see it. Again, always look for these bigger channels. Like here, you're probably trading this tighter, shorter term stuff, but by putting this on here, it really helps you on this sideways stuff. And all we're really doing here is moving back to the trend line. So, and then we go higher from there. So keep that in mind. Let's zoom in. We'll go through the trades. Again, there's not a lot of them today, but there's some pretty straightforward ones today. So anyway, 7 o'clock came right over in here as we're just kind of working sideways. Not a lot of action this morning. Today is rollover day. I don't ever roll over until the following Friday and sometimes on Monday. So tomorrow I'll open both charts. And if the new chart has the most volume, then we'll go with it. And if this one still has the most volume, we'll stick with it and probably won't switch till Monday. 90% of the time, I'll be switching on Friday. But every once in a while, the volume doesn't roll over till the next trading day, which would be Monday. So you just have to see. But that's how I do it. I have both charts on open now, as effective as today. And tomorrow I'll open it up and we'll look at them and I'll see which one appears to be still holding the most volume. And generally it will be the new contract by Friday, but sometimes it's Monday. So that's a good way to do it. But anyway, 7 o'clock came, right in here as we're making this high here, and you could take this short, second entry short that I forgot to mark over here. Um, Notice the new low, first entry, second entry. And that's a lower high. We're continuing to kind of make lower highs. It's definitely a range. I just forgot to mark this. And you can see that range. And that's just a lower high, second entry short. Of course, you're not as crazy about second entries, but if you get a setup that fits our criteria and it's a second entry, by all means take it. So, and somebody asked me this today about going long into the middle of the range or going short into the middle of the range, and you know, when it's okay to do that and when it's not. Well, generally when it's okay is when you've got some previous moves that show you it's not really holding. And you can see when we came off the low here, it went on through. When we came off the high here, it went on through. When you came off the low here, it went on through. And so here's one that didn't quite go on through, but it still made a lower high. So if you'd have taken that trade, it still works. So in this case, I'd say it's fine to take through the middle. Here again, notice we pushed. Here we came back, but that's a fairly long move, and it gives you a failed second entry short, and I like going long there. So that's really, there's no rule that says you can't enter in the middle of a range. You just need to be very choosy and make sure you're reading the chart right and kind of look at the past history and see what it's showing you, if it's safe to do it. And if every time it's turned into the midline, it turns back down, in other words, maybe it's getting stuck on one side of the range and this turns out to be your highs and this turns out to be your lows, and by all means don't try to go long into the middle of it. And so that's the key to it, really. But anyway, we had this failed break. There's really two legs down here, and we fell, and like you would expect, prices fail and turn up, and you got a leg up, correction, second leg up, and so there's a second entry short right here. And when it breaks higher right there, that's a failure. So I like going long there. And this looks a little like yesterday when I talked about the one that failed, that where I had the losing trade, and you only had the one tick break there. Well, today, of course, that's strong in my mind from yesterday, and so I'm looking at this. But there is a little bit of difference here too. Notice that's clearly a leg up and clearly a correction, and then clearly a second leg up, and then you get a second entry. So I think you can treat that one like a second entry. But then you move up again and pull back. And so then I'm thinking about yesterday, and that clearly looks like a leg with two legs in it, followed by another leg. And I actually didn't measure those, but if you measure them, they're real close to measured legs. I actually looked at the bigger picture there and took those two legs as the first move, and then you're expecting a measured move up, and we went way on past that. But anyway, you might treat this like a failure on a failed second entry short. I marked it green. It's a little, you do have this failed breakout, and that's generally what you expect. But before you go higher, you want to kind of see this resistance act as support, like it did right here. It pushed back through and pulled back again, and notice how it holds and then goes higher. There's no long there, there's no setup there, but because this is back inside, it's a little questionable. But I think that's clearly two legs up, and we'll probably at least get a scalp out of this. There might even be room back to the, I'm not sure, I didn't measure it or anything, but there might be room back to the 1.5 points. So you could have scalped out there anyway. There's enough room even to go back to the resistance. So you may take that trade. So it's kind of like what we talked about yesterday. In a bigger picture, this is like one leg and then another leg. So on this chart, it's clearly a little different than that. So we're thinking of, if you went to the next size chart up, you clearly see probably a second entry short right here that fails and goes higher. So I hope that's clear. But anyway, we move up, and I just don't see any entries as we get up here. There's a little failed second entry, or I'm sorry, a hidden second entry long right there, but this is your signal bar, not very good. If you'd had a good signal bar there, you might go long there. There's a couple of problems with it. We don't have the measured move yet, so there's a good idea prices are going higher. And notice right where that resistance came in right there. And I guarantee that's because people that look at these measured moves started taking profits there. And you found a little resistance. Even though there's enough buying pressure to take it higher, you had a bunch of selling come in as the smart traders take their profits at a measured move. They don't get greedy. They know that's a good chance that there's a good chance that prices are going to turn down there, and they start exiting there. And that's smart. Maybe if you got multiple contracts on, you only take some of them off and you leave a few on and tighten your stop and see what happens, because clearly you wouldn't have got stopped out and you would have got some more out of it. So there's different ways to handle all that. A lot of that's personality driven and what fits your personality. I'm a scalper. I don't like to see money in my tin can, so to speak, and then have to pour it back out and give it to somebody else. So when I get some profit, I take some of it. And that's why I do the scalp and run. And people ask me why if you do get money, make more money on runners and add more profit on runners, why don't you just swing trade all the time? Well, the way I trade, I make most of my money scalping, and the few swing trades I get more than make up for the few losses I have. And when I get some really good runners, it's just gravy. It's just bonus day. It's like a bonus paycheck at the end of the month or end of the day or end of the week or whenever. So, it's based on what your personality is. If you can't swing trade and you don't like that, and you don't like the having a stop that gives you more risk than your profit, and I know they teach it all over the internet, but if you're swing trading, they're right. And if you're a losing trader, they're right. You have to pay attention to risk versus reward. But when you're just scalping for 4 ticks, the odds are, if you're reading the chart right and you understand what you're reading, the odds are so far stacked in your favor that it doesn't matter so much about risk reward. I mean, if you're putting your stops where they're supposed to go, look right here, prices never even, that took off and never even dreamed of coming back. Same thing. It took off, never even dreamed. You don't take any risk at all, hardly. Everywhere you see a trade, that one took off. No, the whole bar is only 4 ticks. So you're only taking 5 or 6 ticks risk to begin with, and it takes off. Here, same thing. Same thing. Those prices never even come close. You never even really take any heat on them. So just keep that in mind. Even way down here, you don't take any heat on these. This one you might not even could have got in because it went so fast. Look right here, no heat at all. It actually came back here and still you would have survived. Right here, no heat at all. Here, you got some heat when it came back. Well, you probably already, if you're following our rules, you already scalped out and you never take any heat at all. But if you're swing trading, you might get a little nervous when it comes back. Right here. So, but again, once it takes off, and just for a few minutes, it comes back, but then no heat at all, and it's gone. So if you enter at the right places, look right here, no heat at all. Right here, you might have got worried about this one a little sideways, but very rarely do you take any heat. So don't get hung up on this risk reward stuff. If you're swing trading and you're a losing trader, risk reward is everything, because gamblers have to have that. And if you're just throwing darts at the board and you're gambling, then you have to have a risk reward. But if you're taking a very pinpointed low risk entry the way we do, with very little risk and you only have to get 4 ticks. Well, technically you have to get 5 in your favor before it moves and breaks an important key point on a price chart before you take a loss. And that's why we put our stops where these stops are not just picked randomly. They're picked there for strategic chart reading purposes. Because that's where prices have proven that you've got support there or resistance there. And so that's a strategic place that if prices do turn back and break, then you've read something wrong. You're not reading the chart right, or something's changed instantly on the chart. So the odds are so in your favor. And we're at 20 minutes here, and I ain't even talked about hardly any of these trades. But we talked about this one. I just don't see any way to get in any of these others. This would have been a possibility with a hidden second entry long here right at the key entry point, but the signal bars are the red. Let me zoom in some more here. I'm sorry. The signal bar is the red one there, and you can't enter on that. And of course it runs up, and then we make a new high, and you get a first entry, pulls back. There's actually a second entry long right there, but you can clearly see the congestion. Don't take that trade. But notice the new low right there. It's lower than that one, and then it tries to go short once, twice, and so that's a failed second entry long, or I'm sorry, that's a failed second entry short. So you may take that. It's still a lot of congestion right there. Resistance is not far away. There is room to scalp out here. I marked this one green simply because I like that trade. The fact that it tried to go lower twice and failed. We're probably going to make that new high now, and we do, and we actually push up and make one more. And that's the thing about it. When you see a trend that strong, it takes a little while for the momentum to wane on it, and so that's why your timing has to be right, and you can't be trying to pick tops and bottoms. You need a reversal pattern. And notice what happens. You finally get this big sell-off. Look how we're fighting the EMA, and then suddenly, boom, it shoots right through, and it shoots through strongly. That right there is your first clue. Boom, that's clue number one. Something's changing. Look how long we've been above the EMA and couldn't even get back to it, much less through it. And then suddenly you get this big move through. Well, that's your first clue that something's changed. Doesn't mean we're going to sell off yet. That's just pay attention to that, because that's telling you something big. And then of course we're moving down. You get a little overshoot, and you get a first entry long, and then you get a second entry long. And it's tempting to go long right there. Don't do it. It's all that congestion. It could break higher and make one more push lower. Most likely we're going back and try to test the EMA here, but don't risk it, because that is telling you something. So, and then you get this second entry long that quickly turns into this big bearish bar. I like going short on this one. It's a failure. It's technically not a failure till it breaks lower right there. But this bar makes the high, so your signal, this is technically your signal bar. This is just your entry point here, and your stop has to go above the high point, so it has to go up here. So this is really where you're entering, one tick below this bar, because that's where it became a failure. So when that bar closed, just put your sell stop right there, and if it breaks lower, and that was a quick, easy scalp, but you didn't get anything more. But even for the more conservative traders, a few minutes later, you get a second entry short right here. Now again, that signal bar doesn't qualify for a short. It's too bullish. But if you notice, this is a new swing high. It's higher than that one. And you get a first entry, second entry. So what they did, once again, they trapped those shorts. They were having a hard time taking this lower, and so they trapped the longs, and they sell it off. And now look what happens. Now everybody knows we're not going higher, we're going lower. We got to get out of it. Anybody that was buying up through here, still holding, they got to get out. And then all the shorts see what's going on, and they all come piling in, and that's why you get this big move back down. We're going lower. And this trap wasn't strong enough to sell it off. But you can see how quickly it moved lower. Quick, easy scalp. That's the easiest scalp you'll ever get. Those traps. And then same thing right here. They still couldn't sell it off, so they run two more legs up, suck in some more longs right there, and then boom, and then everybody knows we're going lower. And you're probably going to at least get a measured move, and you may get a whole lot more than that, but I would start looking for a measured move. Technically, I probably would have, well, this is still part of that first move, yep, so that's the way I would do that. And so you're probably at least going to here. But as you can see, this thing just kept going. All these longs are having to exit, and more shorts are getting brave and coming in. But I don't like entering way down here like this. The only reason I marked this one green is because you got a new high there and you try to go higher once, you make another leg down, you try to go higher twice, and it fails right at the key entry point. Big bearish bar. We're probably going to move on down some more. And then, of course, you get a first entry, second entry here. Again, I made it green. We're not back to the EMA, which is where your more ideal entries are going to be, but you're also close to the lows. But I think there's enough room to get out there. Either way, I like that trade. It's a little aggressive. It could fail on you, but that's been a really strong move down. And you're going to definitely make a new low here. Now, the problem is your timing could be off, and you could push up one more time and give you a trap or something, but they didn't need it. I think enough people see that this is a strong trend. And then suddenly, boom, you push up and look, the EMA doesn't hold at all. Pulls back, pushes up again, pulls back yet again, and when it breaks higher right there, I consider that a failure. We're going higher now. And boom, look at it go. And you can see how it rockets up real quick. That's the trap that gets all these little shorts that are trying to jump in here first. And as it continues to go, the rest of them realize, hey, we got to get out. All these shorts, hey, you got to get out. We're going higher. We got to do something different here. And it runs up. And here's another one of those. Here's your new low. And you get a little first entry and then a little second entry. And the only reason I like mark these for a maybe is because these are strong moves. Remember me talking about the little tiny bars with lots of stems and they just keep going and the corrections are very shallow. That's what that's all about. And generally you could probably take that anyway, but because it's a failure, it just gives it a little more weight. There's actually a second entry long right here. I didn't mark it, but you may take that. Notice you got a new high and then you get a first entry and a second entry. The problem is that looks like all like one move down, and I just think it's a little risky. You could argue for it to be green because that's the first break of this strong channel, and so we're probably going to make a new high. And there's a possibility there's a bigger pattern here, and there's a bigger two-tiered pattern, which is basically this blue channel. I'll just make it blue. And you can see it there. And then of course we work back right there. This is basically a double top. So you get a first entry and then you drop down, you get a second entry long, confirms that key entry point, fairly decent bar. I like going long there. It doesn't take off. That is a little congestive. So you could also treat that like a failed breakout. Actually, it looks like two tiers, but I originally had it like that. But it's really like two tiers right there. And so there's not only the second entry, but you got a double test of this right here. You got the little bounce right off support. Plenty of room back to the highs. I like going long there. And then, of course, you get another bounce here, but that one's also off the key entry point. And it's a second entry as well because you got a double top here. So first entry, second entry. Nice signal bar on this one. So I like this one. And this is the one. And this is why it pulls back here. Breaks out of this little trading range. Pulls back and let me just drag it over. Pulls back and tests it once and it goes up and then comes back and tests it again and then it takes off higher. So it's tempting to go long right there, which if you want to be a little more aggressive, you could go long right there because there is a little bit of a pullback. I just think it's dangerous because it could come back and run the stops before it goes higher. So I didn't mark that one, but there's possibilities there. But notice we're running up and the midline's kind of holding here. And you got your measured move and you pushed a little higher. And look how it runs right through the EMA. Wake up, something's changing. But the key here is that's the first break of this trend line. So be real careful about shorts here. And if you get a good setup to go long, you may take it. And notice you get a first entry and then it turns down again. When it breaks higher right there, that's a second entry long. It's not an ideal setup. It's a little bit congestive. It's under the EMA. but it's a second entry and a strong trend, and that's the first break. So you may want to take that one. And of course, we run up and make a new high. Notice you got a high; it's higher than this, all that resistance. And you get a first entry, and you move down. You get a second entry long right there. This is not a perfect reversal, but it's still a failure, and we're below the EMA. You may take that one. There's a lot of congestion right there. This is one of those that, again, it looks like one move down, but that's more than a tick, so you got to count that one. But this one's only a tick, so and there's congestion. Um, I marked it green. If you took it, plus notice the reason it pulls back here. Notice how it pushes through that. Notice how the EMA was holding right there, or no, I'm sorry, not the EMA, the midline of the two-tiered channel. That little dash line is the midline. And notice how it's holding prices, then it pushes through, and if it comes back and tests it, and it turns it down bearish again, that's a good sign. That's what you want to see. But not only do you have the midline, you got the EMA just above, and you got this trend line. So you got three areas of confluence, this strong resistance. So for that reason, I kind of like this one. And you can see it didn't fool a lot of people because it took it a little while to work down, and it didn't drop lower quickly until they took it higher one more time and then took it back down. And what happened here was they probably had a bunch more jump in trying to go long, and then when they realize they're wrong, boom, they have to exit. And that's why this rockets down real fast. But you see, it didn't take long for it to come back. A lot of buying came in right there. And that's because there was some support across here as well. This runs back up. You get a first entry, just too congested, not a good signal bar, and right at 2 o'clock, and that took you into 2 o'clock. So this went 30 minutes, a lot longer than I really wanted, but we talked about some important stuff there today. Pay attention to the stuff I talked about in this video. This is some pretty important stuff that I talked about that you won't normally hear me talk about in the YouTube videos, because the idea behind these videos is not to teach our strategy really. A lot of people want me to go into more details, and you see how long this took, 30 minutes, and there's not even a lot of trades. The idea behind this video is just to show you the trades so you can compare and have your chart study and make sure you're seeing the right things compared to what you're seeing to what I'm seeing. That's the purpose of this video, not to teach the strategy. If I can teach you something, I want to, but that's not the purpose of these videos. So that's the reason I don't go into a lot more teaching in these videos. If you want to learn, go to the website. Yeah, we sell a few things there, but I'm not hawking my wares. There's plenty of that you can learn whatever you want to learn. If you want to buy any of our materials, they're there. But I'm not doing this to hawk the stuff and send you over there. If you like our stuff and you want it, it's worth what we charge for it. But that's not the purpose. There's plenty of free stuff there. You don't have to buy anything. You can still learn. Of course, it's a little harder to put it together, and it doesn't go into as much detail, but it's there. So anyway, I'm going to wrap this up. We're getting a little long. I hope you had a good trading day. I hope this was a good week for you. We'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.